I'm Dan Fitzpatrick at StockMarketMentor.com. I'm doing this video on Saturday, March 24th, though promise you, you're getting it on Sunday. And I want to look at Priceline to just underscore and actually challenge you to do something. To underscore the importance of holding a stock. Look, this thing's gone parabolic. I mean, it's kind of putting Apple to shame. Like, if you were Apple, wouldn't you kind of be embarrassed? I would. You know, I'd like Apple next to Priceline on the stock exchange. I would be like kind of hanging my head in shame trying to hide my face. Priceline's been absolutely smoking lately. You look at the weekly chart, looks to me like it's just getting going. This is one of those instances where short term, meaning on the daily chart, this is way too overextended to buy. Yet on the weekly chart, you look at it and say, well, gosh, this thing is tracking right along the upper Bollinger Band. Volume is still a little spiky to the upside, not consistently, but we're getting these upside, you know, these higher than average volume spikes. Maybe I need to just buy some stock before this thing goes to 1,000. So what you do is you decide, okay, I want to buy my stock. Now that's your decision. Now you get into the action time frame and you say, well, I want to buy it when it pulls back to the 20-day moving average. Okay, well, me too. Problem is it's not doing that. So what are you going to do? Here's what you do. Whatever the normal position size that you would have in this stock, buy 25% of that. Maybe buy a third of it. 25%, maybe a third of it, you buy right now. Let that thing continue to move higher, and you just assume that you're going to hold that position. That's your base position. That's the foundation of your trade. You're just going to hold that. Then if the stock does move back to the 20-day moving average, then you buy some more. That's reducing your cost basis in the position. Excuse me. That's the only time that you're going to average down. You average down once. You never average down twice. You know why? If you're averaging down twice or more, let's face it, you're just trying to buy yourself out of a losing position. If you have an infinite amount of money, you can do that. But if you have an infinite amount of money, why are you trading? So, you average down once. If the stock, though, doesn't pull back, if it just continues to move, then after you've got a pretty good profit in the stock, whatever your definition of pretty good profit is, then you take the next third or even a half of a position. But the idea is that you should be able to set a stop right about where you bought the first chunk. So what you're doing is you're basically locking in a break even on the trade before you take the next leg up, before you take the next chunk of stock. Gradually, you're going to have a position built in. You're going to be long the stock that's doing this. Yes, we all wished we'd bought back here. Probably a lot of you did. I, true confessions, didn't. But this is how you trade a stock that looks like it's going parabolic on the week or on the daily chart, but looks like it's just getting started on the weekly chart. So anyway, I hope this helps. Members, get to the weekend update. I've got some volatility squeezes that I think are going to be some pretty solid trades for us just this week. So get over there with your notepad and check those out.